There are 8 stock exchanges in India. The Bombay Stock Exchange, BSE, and the National Stock Exchange, NSE, are the 2 stock exchanges in India that handle the majority of the stock market's trade, NSE. Since 1875, the BSE has been around. The National Stock Exchange, on the other hand, was established in 1992 and began trading in 1994. The BSE had 5,518 listed companies as of February 2020, compared to 1,799 on the competitor NSE as of December 31, 2019. 3 only, around 500 of the BSE's listed companies, account for more than 90% of its market value. The remainder are very illiquid shares. Only in the 1990s did India begin to allow foreign investment. Foreign direct investment, FDI, and foreign portfolio investment are the 2 types of foreign investments, FPI. FDI refers to investments in which the investor participates in the company's day-to-day management and operations, whereas FPI refers to investments in shares with no control over management and operations. Institutional investors can provide exposure to Indian stocks to foreign companies and people. Retail investors are increasingly interested in India-focused mutual funds. Participatory notes, PNs, depository receipts, ADRs, and global depository receipts, GDRs, exchange-traded funds, ETFs, and exchange-traded notes, ETNs, are some of the offshore products that may be used to make investments, ETNs. Although restricted for retail investors, Indian shares are available through interactive brokers, as they must have to gain access themselves as institutional investors. India's economy is classified as a middle-income emerging market economy. It has the 6th largest nominal GDP and the 3rd largest purchasing power parity economy in the world, PPP. According to the International Monetary Fund, IMF, India ranks 145th by nominal GDP and 122nd by nominal GDP per capita, PPP. From 1947 until 1991, successive administrations used the licence Raj to push protectionist economic policies with considerable state intervention and economic regulation, which is known as dirigism. Following the conclusion of the Cold War and a severe balance of payments crisis in 1991, India adopted wide economic liberalisation. Annual average GDP growth has been 6 to 7% since the turn of the century, and from 2013 to 2018, India was the world's fastest growing major economy, overtaking China. From the 1st through the 19th centuries, India had the world's greatest economy for the majority of the 2 millennia. The Indian economy's long-term development prospects remain strong thanks to its young population and low dependence ratio, robust savings and investment rates, and rising globalisation and integration into the global economy. Due to the shocks of demonetisation in 2016 and the implementation of the Goods and Services Tax in 2017, the economy slowed in 2017. Domestic private consumption accounts for almost 60% of India's GDP, and the country remains the world's 6th largest consumer market. Apart from individual consumption, government expenditure, investment, and exports all contribute to India's GDP. India was the 9th largest importer and 12th largest exporter in the world in 2019. Since January 1st, 1995, India has been a member of the World Trade Organization. On the Ease of Doing Business Index, it is ranked 63rd, while on the Global Competitiveness Report, it is ranked 68th. As of 2019, India's labour force is the world's 2nd largest, with 500 million employees. India boasts one of the greatest concentrations of billionaires in the world, as well as significant economic disparity. Because India has such a large informal sector, just around 2% of Indians pay income taxes. During the global financial crisis of 2008, India used stimulus measures, both fiscal and monetary, to promote growth and generate demand. The economy recovered in later years. According to a 2017 research by PricewaterhouseCoopers (PwC), India's GDP at purchasing power parity might surpass that of the US by 2050. According to the World Bank, India must focus on public sector reform, infrastructure, agricultural and rural development, removal of land and labour regulations, financial inclusion, boosting private investment and exports, education and public health in order to achieve sustainable economic development. The United States, China, the United Arab Emirates, Saudi Arabia, Switzerland, Germany, Hong Kong, Indonesia, South Korea and Malaysia were India's top 10 trading partners in 2020. Foreign direct investment (FDI) inflows into India totaled $74.4 billion in 2019-20, with the service sector, computer and telecom industries continuing to be the major sources for FDI inflows. India has free trade agreements in place or in the works with a number of countries, including ASEAN, SAFTA, Mercosur, South Korea, Japan and a number of others. The service sector accounts for half of GDP and is still developing at a rapid pace, while the industrial and agricultural sectors employ the bulk of the workforce. India is the world's 6th largest manufacturer, employing over 57 million people and accounting for 3% of global manufacturing output. Rural India accounts for over 66% of the population and accounts for roughly half of the country's GDP. It has $585 billion in foreign exchange reserves, which places it 4th in the world. India's national debt is enormous at 89% of GDP, and its fiscal deficit is 9.5% of GDP. Government-owned banks in India are grappling with rising bad debt, resulting in sluggish lending growth, while the NBFC sector is mired in a liquidity crisis. India is dealing with moderate unemployment, growing income disparity and declining aggregate demand. In FY 2019, India's gross domestic savings rate was 30.1% of GDP. Independent experts and financial organisations have accused the government of faking key economic figures, particularly GDP growth in recent years. India is the world's largest maker of generic medicines, and its pharmaceutical industry supplies more than half of the world's vaccination need. With $191 billion in sales and over 4 million employees, India's IT sector is a significant exporter of IT services. The chemical sector in India is very diverse, with a market value of $178 billion. The tourist sector employs about 42 million people and provides around 9.2% of India's GDP. India is the world's 2nd largest producer of food and agriculture, with $35.09 billion in agricultural exports. In terms of direct, indirect and induced impacts in all sectors of the economy, the construction and real estate industry ranks 3rd among the 14 key industries. The Indian textile sector is worth $100 billion, contributing 13% of industrial output and 2.3% of GDP, while directly employing nearly 45 million people. By the number of mobile phones, smartphone and internet users, India's telecommunications industry is the world's 2nd biggest. It is both the world's 25th and 3rd largest oil producer and consumer. It has the world's 5th largest car sector in terms of output. Its retail sector is approximately $1.17 trillion, accounting for nearly 10% of India's GDP, and it boasts one of the world's fastest growing e-commerce marketplaces. India possesses the world's 4th largest natural resources, with the mining industry accounting for 11% of industrial GDP and 2.5% of overall GDP. It's also the 2nd largest coal producer, 2nd largest cement producer, 2nd largest steel producer and 3rd largest electricity generator on the planet. Following indexation, the tax burden on the sale of Indian equity is 20%. The gain is categorised as short-term capital gain if the equity shares and equity-oriented mutual fund units are sold within 12 months after purchase. Such a short-term capital gain will be taxed at a rate of 15%. Equity research on Indian shares can be done with the Ministry of Statistics and Programme Implementation website. First, with more than 100 regions covered, you can learn more with the Exotic Markets book available on Amazon. Second, you can explore sector and industry intelligence for different countries by going to pervasives.com. If you have an issue in relation to accounting and tax with foreign stocks, you can contact us by going to our website.